All right, so the global recession. What exactly is going on here? So, first thing first, Goldman Sachs predicts the US GDP is going to shrink by 5% in the next quarter. So, I mean, obviously, Goldman Sachs is very credible. And when you start hearing numbers like this, it makes you want to panic. I mean, so what exactly do we do? And then going across the ocean to China, 5 million people in China lost their jobs in the first 2 months. 5 million people. And we know China has some questionable transparency issues. So if they're being, let's say 5 million, it might be even more than 5 million. And then analysts predict that the US jobless or unemployment claims could exceed over 2 million. Over 2 million people will be unemployed, are expectations. And then this should actually be COVID-19, not sure why it says COVID-10. But COVID-19 could cause 20% unemployment rate if the government doesn't do any action. So let me kind of delve deeper into these topics, and then we'll take some questions from the audience as well and see what you guys think about this. But I mean, if you've been living under a rock, maybe you missed the memo, but a global recession is coming. So, right, so here's the article from Bloomberg. They talk about US GDP is going to shrink 5% in the second quarter. They go on to say the world's largest economy will shrink 5% in the second quarter after zero gross domestic product growth in the first 3 months of the year. So GDP has not grown in the first 3 months of the year, and they're saying the economy is going to shrink by 5%. Consumers and businesses will continue to cut travel, entertainment, and restaurant spending, while supply chain disruptions and tightening in financial conditions will further dent growth. Now let's go to this other article here from CNBC. So China is basically has 5 million people in China will have no jobs in the first 2 months. So China's official but highly doubted urban unemployment rate jumped in Feb to 6.2%, its highest on record. So whether it's China or America, these are the big players in the world in the global markets, and things are not looking so good. This is kind of off topic as well, but even a crypto fund went belly up. Adaptive Capital, they used too much leverage. So all these aren't really good times right now. Then if we go to Bloomberg, so Mnuchin warns that virus could yield 20% jobless rate without action. And he goes on to say, so they're proposing a stimulus package of $1 trillion into the economy. So basically quantitative easing, printing a lot more. And the main thing to note when it comes to printing and quantitative easing, printing more fiat currency, is that it may seem good short term, but long term, it's horrible. It's horrible because the purchasing power of the American economy or the American people, and also in other countries as well, the purchasing power gets worse, right? So buying a loaf of bread, buying groceries, your everyday items will require more money. So while printing money seems like a solution, it's actually the problem. Now, obviously, that's not really my expertise, but one other person maybe you guys could check out, even though he gets trolled in the crypto space, is Peter Schiff. He has really some great analysis when it comes to understanding the American economy. All right, then he goes on to say that he told the senators that he believes the economic fallout from the coronavirus is potentially worse than the 2008 financial crisis. So 2008 is going to look like a walk in the park compared to this. Then we go on to say here, Goldman Sachs says over 2 million unemployment jobs, and Bank of America says it could be even 3 million. So this is the chart that really kind of sums it up, right? So here we have the initial jobless claims, and Goldman Sachs predicts that we're going to go from here, this is almost close to zero, to 2.5 million people due to the coronavirus. Now, the coronavirus didn't really cause the issue, but this was a debt bubble and credit bubble that was going to explode, and the coronavirus was the pin that popped the bubble. It could have been any pin out there, but if we go back in history and look at everything that's happened, in the markets, every crash, there were events that popped the bubble. So if we go back to, for example, with the dot-com bubble, some people say 9/11 is what popped the bubble. It didn't cause the recession, but it was what popped it. Then if we go to 2008, people say it was Lehman Brothers, Bear Stearns going bankrupt, going belly up. That popped the bubble. And then you had everything with mortgages and everything and the whole economy just kind of went kaput. Now, looking at the market now in 2020, it's obvious that the coronavirus is what's popping the bubble. Now, if we go back to even last year, when the yield curve inverted, people were expecting a recession. For those who follow me on Instagram, you guys know I've been predicting the recession for a while. Not that I want to, but just kind of based on what the data tells us. And it's definitely concerning. So I know if you're out there, if you work an hourly job, I mean, times are tough. Times are going to be tough. So as we like to say, hope for the best, but plan for the worst. I mean, me personally, I've been going through looking at all my different business card statements and trimming down, pruning, asking myself, do I really need this? Can I get this for free elsewhere? So I'm living like I'm a broke college student. So, and I think that's something other people can also do as well, because we're not sure how long this could last. Because what if because on average, a recession lasts longer than 12 months, 12 to 13 months or so. So what will you do if 20% of the country or the world is unemployed? How will you pay your bills? So all these are questions that I know everyone is asking. I mean, myself included. And so even with our team, we're just really trying to see how we can really stay frugal and nimble and not grow too fast. So apologies if there have been any delays with just customer service or just other things, because I mean, this is a global crisis and all of us are dealing with it. But yeah, I mean, that's kind of the rundown in terms of what's happening. In terms of how to really respond, there's several ways to kind of think about this. So as an investor, I mean, a recession is really the best time to invest. Assuming you have capital on hand to deploy, now is the best time to invest. Doesn't mean go out there and buy the dip right now and spend everything, but I think a strategy would be dollar cost averaging. Obviously not financial advice, just my opinion, but dollar cost averaging over the course of this recession, because that's when really you get the best deals, the best bargains. I'm not going to go too much into it because we covered this, I think, 2 weeks ago on the last live stream. But that's really the best strategy, because I have lots of people, even people not in crypto, DMing me, sending me emails saying, Ian, hey, what's the plan? Like, is now a good time to invest? I mean, all I can say is it's going to get worse before it gets better. So, and don't try to time the bottom, because nobody gets that right. By the time the bottom is in, it's already bouncing back up. So what you want to do is just dollar cost average across a long period of time, knowing that we could be in a recession for the next 12 to 18 months even. So having that perspective, you have to really be a long-term investor. If you're in this for a quick flip, then you have to have a different strategy. But if you're looking to really buy the dip, then this could really be the time to do it. Now, let me talk about Bitcoin and crypto, because everybody's saying is Bitcoin and crypto tied to fiat currencies? Is it tied to the capital markets? I think right now it's kind of showed the entire world that yes, it is tied to capital markets. And honestly, based on Tokenmetrics and based on our analysis, right now might not really be the best time. Right now it's kind of been neutral. Right now the models are neutral and bearish. So with that being said, I think you really have to be very, very cautious with dipping your toes in at this point in time. You have to kind of know what you're doing. And I'll cover this during the overview of the top 10 cryptos of the week. But I mean, stay safe, stay frugal, and plan for the worst.